is there any other alternatives to getting money without taking a loan out on the property? Well, okay, so if you get the HELOC, the banks may want the W-2, but because the traditional HELOC is underwriting your income and not just the equity, right? But there are other ways to get loans that are similar to a HELOC. A credit union may allow something called manual underwriting, which is where they can focus on your equity, not your employment. So you have it as collateral. You can also get a portfolio line of credit, which is a line of credit where your assets are the collateral that's backing the line of credit. And so you can ask your bank if they have something like that. A lot of asset-based lending is built that way. Believe it or not, a lot of wealthy people use assets to back their loans and not just like a good credit score, that type of thing. You could do a cash out refi. You could refinance the property and pull the cash out. That's a possibility. Ultimately, I would say if it's a rental property, maybe you can find a way to either increase the rent somehow or use depreciation and things like that. They did under the Trump administration change the rules of depreciation that in a way that a lot of rich people are very excited about. They're letting you write off a ton of the depreciation very early. So this is why a lot of the rich people like Trump is because he's letting them make a ton of money by depreciating their asset, which is basically like an imaginary loss in a way. It doesn't affect your cash flow, but it does reduce your tax bill quite a lot. So maybe something like that might help. And again, I think that I'll end with something I think is important to know in terms of just the general formula for financial security, and that's wealth and income. Income creates wealth. Wealth eventually should be creating income, and they become kind of a cycle. So if you've got, and also wealth and income save each other. So if you've got an outside disconnected stream of income, then that can help you, like a business or side hustle or your job even, right? Or maybe your spouse's job, right? That's why things like marriage are really big wealth hacks that people don't talk about. Then you got this outside external stream of income. It's important not just because it's liquid, but because it's diverse. And the fact that it's diverse, or what in our terms we call that uncorrelated. It's uncorrelated. That means that if something goes wrong with your wealth, like your property burns down or the stock market crashes, then you've got this other income that isn't affected by those things, right? That's one of the reasons why in 2021 when the stock market went way up, I took a bunch of my stock out and I bought property with it. And so when the market crashed, my portfolio was getting hit pretty hard, but my real estate was fine. Right, because it's like, okay, I don't want everything in one place. I'm gonna put some over here and some over here. And so if you have income, the income allows you to put out your financial fire, so your wealth is dropping in value. You're struggling on liquidity, so you bring in the extra income that helps you to fill those gaps, margin calls and all that. But then at some point, once you've kind of got your feet back underneath you, you can then use the income to take advantage of opportunities and acquire assets while everything's super cheap. But then, let's say your income gets cut off, you lose that job and your income's gone. Well, that's when the wealth becomes the hero. The wealth steps in and saves you because the wealth can then produce the income that you need to get by while your other income stream has been annihilated. So wealth and income really are siblings, and they help each other out. Maybe one's a boy and one's a girl, and those are the two kids, the two financial kids you should give birth to. And if they're both big, strong, sturdy kids, you got a big, strong income stream over here, big, strong wealth over there, then you're good.